All right, our final panel of this evening is our venture capital panel, and I'd like to welcome to the stage Zhang, who's venture partner from Formation 8, Chris Burch, venture investor from Shenzhen Capital Group, Alan Zhu, managing partner from GSR Ventures, Carman Cheng, founder and managing partner of Click Ventures. And can we get the few more seats up here, please? Because we have two more that we're bringing up. Alan Chan, managing partner of Vectr Ventures, and Matt Cheng again from Cherubic. So this is the part where I get to be the moderator, and okay. All right, good. So I'm hearing a lot of talk about, I'm going to jump right in just because I'm a journalist by training, so I like to get right to the heart of things. And I've been hearing a lot of things, a lot of talk about unicorn financings and how the unicorn companies that have raised all these millions and billions of dollars are not being able to raise at the valuations that they had before. And now they're could face some troubles. So I'd like to have just down the line kind of your view, the outlook for the future of unicorns. Are they going to be fading? Are they going to be continuing strong? What do you think? Things I'm hearing is that it's not going to be such a rosy future for those companies that raise money at that high valuation. They're just not going to be able to sustain that. And I'm hearing that they're getting follow-on rounds from VCs like debt loans and things like that to keep going. So what do you think? Alan, what do you think? Let's start with you.
I agree. I think by the time the next cycle comes, which is probably next year, since it's already been 7 years, a lot of the companies that don't have a real business model or a sustainable need will definitely be cleared out. So probably like, anywhere from a third to maybe even half of the companies that are probably at that valuation.
That's a lot. That's really a lot. And do you think that's impacted? I mean, China has a dominant share here in Asia of the unicorn, so you think it's going to hit China really bad, or hits everyone? U.S. too. Okay. U.S. first and then China. And India has got a fair number of unicorn companies too. Okay, Alan?
Actually, we see
you're here from Beijing, so you've got a different perspective.
Actually, we see clear cycles, particularly for China internet companies. For the past 15 years, we see about 5 cycles already. Average about 3 years a cycle. The first cycle is about year 2000, it's the portals. Yeah, so when we have the seen Sohu NetEase. And second the cycle is the SP, the service providers, which don't exist anymore. Right? Even you see in Hong Kong, the Tom.com actually IPO because of the SP service. And then the third cycle is gaming. We have Senda, we have the NetDragon, we have the Perfect World, and all these are delisted now. Right? And then the fourth cycle is the videos like Youku and Tudor, which merged and now acquired by Ali. And the green cycle is the e-commerce. We have the Alibaba, we have the Dangdang, we have the VIP shop, and we have the Jumei, all these the e-commerce. Actually, this is clear cycles. Now, actually, I think we see the end of the cycle, and then we have the in the morning. Actually, I'll see the next wave. So clearly, I think every cycle we see bubbles, and now we see a burst, right? But in every cycle, we also see billion-dollar companies. So I think if you don't bet on the right companies, it's a bubble. But if you bet on the right companies, it's a lottery ticket. You can win billions of dollars, right?
So you invested very early on in Duty, and that's now one of the most valued unicorn companies in the world. And so what do you think its future is now that it's merged?
I think Didi is progressing very well. I think it's very clearly actually worldwide in every country. The local transportation is a big sector, and actually it's a demand. It's a must-have demand for all the consumers worldwide. So the concept is proven in every country.
Yeah, I mean, definitely it has. It's in Southeast Asia, it's in Korea, it's in Japan. It is a worldwide phenomenon now. But the most highly valued ones are in China.
No, it's actually U.S. Uber is 50 billion. now for 60 billion. So
what's the valuation of DD Quality right now?
DD is about 17 billion. So
Okay.
yeah.
Okay. And that's enough to sustain it for a little while longer?
Yeah, sure. I think the numbers are really progressing well. Actually, even Uber thinks China can be as big as the US.
Okay. All right. Matt, you're an angel investor and you've done a number of really interesting deals. And what's the future of some of your portfolio companies that are?
Well, yeah, I think I was also seen a few cycles like Alan, and I totally agree with Alan. And I myself involved with 3 unicorns. But I think there's definitely a valuation bubble. But if you look at the innovation that, like Uber, Didi, or Airbnb, or many other companies like the one that involved Wish, they're actually making people's life much better. So I think it's very different from the bubble that we see in late 90s. A lot of just dreams. All this innovation actually makes you live. It's really hard for you to imagine you live without Uber or Didi now in China and US. So I think, well, of course there's a bad company, that's going to be die, but eventually I think the industry is actually, you will see a lot of, concrete, very solid business model going forward. But of course the valuation maybe adjust a little bit, but good companies survive and make even bigger.
What are the 3 unicorn companies you're behind?
So first one's Wish, second one is Tianga.
From San Francisco.
Yeah, San Francisco, and Tianga, which is the largest live social video platform in China, and Chinese All, which is the largest mobile reading company, hit 4.5 billion in A shares,
Okay.
but down to about 2.5 now.
All right.
But still a good company.
All right, interesting. Carman, you've been behind some really interesting companies and invested in Palantir, and also Spotify and Kabam, and a couple of Hong Kong companies as well, Event Extra. Launch Pilots, I believe, is Hong Kong too, right? So you have this really well-rounded experience of investing in Silicon Valley and in China too. What's the comparison contrast in terms of the unicorn outlook?
If you talk about whether there's a bubble, maybe because of my math background, I would like to look at some data. So if you compare to the bubble time a few years ago, the current public and private market, the total funding is just 2/3 of that time. So it seems like it's not bubble yet. And if you look at the user base, I think there's an explanation of why the companies today seems the valuation is much bigger than before, and they tend to get listed much later. One of the reasons could be the number of users today is much more than before. So like just in a few years, the number of users getting on the internet has been increased 6 times. And up to this moment, although it seems mobile phone is so popular, but actually only 40% of the mobile phone users are smartphone users. And in the whole world, only around 30-something% of users have access to internet. So I think that there's still a lot of potential for cheap mobile phone to get more people online. Maybe the first time they get online is through mobile phone. So a lot of new innovation, if they have a very solid business model, I believe the more than 1 billion valuation is worth it.
Okay. And James, from Formation 8, you also mentioned that Formation 8 had some news too that you might want to share.
Wow.
I don't know if that's related to anything to do with the bubble and the unicorn, but
yeah, it's not related to the unicorn, but we are backers of several of them. Palantir was founded by Joe Lonsdale, one of my partners at Formation 8.
right.
Wish, of course, we are a big backer of Wish.
Mm-hmm.
Oculus VR was acquired by Facebook. We were one of the major investors in Oculus, and a few others, Oscar Insurance, et cetera, Yellow Mobile. We probably invested in 6 or 7 unicorns. I think the private market is probably slightly overvalued right now, but I wouldn't call it the bubble just as is, because the fundamentals are still very sound. Palantir was $20 billion. I mean, or should it be 15? Who knows, right? So, but their business is really, really sound. The business model is sound, and the customer base is strong. And I wouldn't call it a bubble just yet.
Hello.
That's interesting. Okay.
I'm going to jump in here and take the last shot at the unicorns. First, I want to tell you briefly that I'm from across the border, Shenzhen Capital Group. We invest about $500 million a year into about 60 startups, and we have 64 A-share IPOs, which is double our competitor, our nearest competitor, more than double, and we have 102 IPOs in total. So regarding unicorns, I don't think we can expect that every unicorn will succeed. There must be a failure rate among unicorns, right? We haven't, I think the only unicorn we have is probably BGI. This is a genomics company in Shenzhen, but I think we have over 50 listed companies that are over $1 billion. Regarding China, China has 15, I believe, or so unicorns right now. 6 in e-commerce, 3 in fintech, and so forth. But I think the comparison that we can make is, do you remember a solar company called Wuxi Suntech when the IPO occurred in 2007? Okay, when I saw it, I was like, oh, it's over. In the U.S., you have a company that normally dominated the space, like typically you have, it's like Coca-Cola, Pepsi, and then like whoever else, right, across all these industries. So I thought, Wuxi Suntech, it's done. Does anyone want to guess how many IPOs came from the solar sector in China? Anybody? Make a guess.
A whole bunch.
How many? 40? 4. Anyone else? I stopped counting at 18. So I think like this trend of the unicorns in China it's going to keep coming. Yeah, that's it.
Well, as an RMB investor, do you think that you're more shielded from the unicorn?
I don't know. When we invest in RMB, we're shielded unicorns. Like the companies that we invest in for like an A-share IPO, you only need about 8 million US in net profit to have an IPO. But you're getting a PE of like 60 or 80 or 120 or 200 or 400 or whatever. The average is 70 or something. But yeah, so we don't really think about unicorns too much.
Okay, so how about the IPO market? And that's been a situation in China, kind of a roller coaster situation of on and off. And how is that impacting your portfolio company's future? I'm seeing a lot of deals being made by companies, a lot of M&A, because IPO window is pretty narrow. So how is that impacting your portfolios?
Let's go back down the line. So quarter over quarter IPOs globally are down 53%. The money raised is down 75%. China outbound IPOs are down 83%, and there are no IPOs currently in China. How does that affect us? Well, presumably a lot of people will lose interest, and I think the valuations will come down a bit, hopefully.
Well, I mean, a lot of companies don't have to go public anymore, right? Like Palantir and, why go public, right? There's a private market there, and the investors can exit, and they can raise money and support the business. And that's a very interesting phenomenon, actually. Many of those companies
staying private.
They stay private. They don't have to go public anymore.
Right.
I think a lot of the companies now, especially in US, they use a kind of liquidity program to allow the early investors and some employees to get some exit through the secondary market.
Yeah.
And Nasdaq recently just acquired Nasdaq Private, a joint venture they did with SharePost. And so after Nasdaq acquired the Nasdaq Private, they also acquired secondary market. So two companies in
second market.
Yeah, second market. So it seems like the private secondary market will be more active in the coming futures. So there is a lot of different channels for the investor to get exit. And in the other side, we also see a lot of the companies they tend to get bigger and bigger in terms of their valuation instead of going public when they are still small. So that's my observation.
Okay. Any other comments on IPOs? Matt? Yeah?
Yes. So I think as an early stage investor, so our job is to find a team and help them to grow and then raise the further on. And then the closed window of the IPO market, what we see, which brings the impact to us, is that because IPO is the way to provide liquidity for growth stage investor, later stage investor, and because there's no such exit window, and then it's really also hard for them to exit to the secondary because their amount in the shares is relatively big. So it kind of slowed down the growth investor. Literally in China right now, at least for the people that I know and I worked with before, they kind of all stopped, like Series C player, Series D player. So in China there's a Series C crunch because there's no IPO window, and then when they invest in such high valuation, they kind of stuck there. So that's kind of what impact us as an early stage investor.
Right. Yeah, that's what I've been hearing.
Yeah, I think for the local Asian market, the IPO market is very actually hard to predict because it's controlled by the government. So the government can shut down the IPO window for a long time, right? And for the US dollar market, actually, for US market, I think it's as I said earlier, it's pretty cyclical. So every 3 years it's a cycle, right? We just have the e-commerce cycle, and all the e-commerce companies ready for IPO are already went out. So it's not because the window is shut down, it's because there are no companies ready yet for IPO. So I think the next cycle will probably come in 17 and 18, and this will be the O2O cycle. I think most of the O2O companies will be ready for IPO in the US market from 17 to 18.
Alan, did you want to add anything?
I was just saying, like for early stage investors, and we don't really do China that often, so I think the new chapter of the Jobs Act is very interesting. Gets everybody, it's not really just Kickstarter and buying your like cool toy anymore. Like you can actually own a piece, and I think with that, a lot of systems and mechanisms or whatnot will, it'll have to allow people to be able to trade and get out of some shares, or you might as well keep it as Kickstarter model and not let anyone have any equity at all.
So one of the things I hear about in Hong Kong for the entrepreneurs here in Hong Kong is that there's a real Series A gap, that they can get the seed financing, but they can't really get much beyond that. So do you see any improvement? You brought up the crowd financing angle. Do you see some improvements with angel investing and startups being able to scale from Hong Kong with enough oomph in capital? Any improvements coming along, or is just kind of status quo?
I guess we'll go back down again.
Yeah, go ahead, Alan. We'll swing that way now.
I think, the Series A crunch is interesting because in Hong Kong there traditionally seems to be a gap there. But I think if the business is done properly and it has a good scale, I mean, you're not only looking for Hong Kong money to fund a Hong Kong, company like Lamplight. If they do well, I mean, their investors can come from anywhere. Mm-hmm. And, we've helped several of our companies get their next round. And it's from Chinese, Hong Kong, Taiwan, US investors. And I mean, if you're doing something good, someone will fund you. It's just a matter of, well, you actually have to perform, because by then you have to show metrics. It can't just be pictures on a paper with a dream anymore.
You think investors are being a little bit more cautious now today because they are worried about this bubble effect? Yeah, they are?
Yeah.
Okay. Have you slowed down your pace of investing?
We have for this year, at least. I mean, the thing is for us, we're going in so early that so if the cycle hits next year, as long as we think our companies are doing well and have a healthy business model, by the time we're worried about that, the cycle would have ended and sort of restarted again. So, sort of the beauty and the curse of early stage. You have to wait a long time, but sometimes it can ride through if it's actually a sustainable business.
Okay. Anyone else on the angel investor the gap in financing question?
Actually, I think the angel to A actually is the most difficult part, not only in Hong Kong but also in US and China. The reason is actually there are many actually angel investors, and a lot of guys want to see the funding, but there's always a limited number of Series A investors. The institutional investors are always limited. So in both actually US and China, I think from seed deal to A, the ratio is 20 to 1 or even 30 to 1 depending on timing. So from A to B is usually 3 to 1, and from B to C another 3 to 1. So the challenge from C to A actually is much higher than the rest round.
Yeah, so I think, so my experience, because I also do startup, I did 3 deals in Hong Kong. Yeah, so I think I'm kind of agree. I think good numbers, attracts good investor, and then right now I think it's a global markets, and then investors are looking for good investment around the world. So if you have just need to focus on your products, and then and then also you have to bring your awareness. Try to attend. There's a lot of events in the region, and then try to be investors, and good companies still gets money. That's my experience.
My observation is actually some of the good companies with very outstanding result attraction, they still attract a lot of funding. Maybe most of the investors are more conscious now. So when they see really good outstanding companies, they tend to everybody go into the same company. So in the last few investment I did, I found that my startup, they tend to oversubscribe. Yeah, most of them oversubscribe 2 times, and sometimes they need to squeeze out some investors. Yeah.
Yeah, I agree with your observation that there's a lot more seed investors, and also I would add, there are a lot more late stage investors, in terms of amount of capital deployed. Compared to A and B round. A and B round is just difficult. Seed investor, we make seed investments as well. You don't do a lot of diligence. You don't even set the price sometimes, right? A lot of times you don't set the price. You just do a convertible note and you say, good luck, here's, $300,000, come back in a year and we are ready to raise A. When you're ready to raise A, you have to set a price, right? You have to do proper diligence, and that's just difficult to do. And so you have a lot of entrepreneurs who are successful and who make money and they want to support their friends, and that's there's a lot of seed investments I think in both U.S. and China, and I think this phenomenon is completely understandable how it came about.
Right. And
yeah, there's
Chris?
not a lot more to add there. I think we've covered it pretty well.
Yeah.
In the A round, it's really hard to get the return for the risk that you take. Is a problem. And in China, there's an initiative right now. It's called 大众创业, which means everybody become an entrepreneur by Premier Li Keqiang. I have no idea how this is going to turn out if everyone in China becomes an entrepreneur. But let's just sit and watch, right?
Right. On the valuation question, how much have valuations come down? I've been hearing around, 30% kind of on average.
I want to jump on that. I actually don't think my company is aware. I just happened to actually go back and look through the data since July myself. And we're doing probably 2 to 3 times higher than we were 3 years ago in valuations. 2x, 3x higher than we were. And it's all these O2O internet companies, e-commerce companies that won't make money until 2018, that sort of stuff. It's sort of out of control, but that being said, we're just so going at it, hand and fist, investing money. And I think I do see a lot of, traditional businesses are not getting money. And then I want to add something else as well. Is that it's like where to invest and so forth. It's like the economy in Shenzhen, Beijing, and Shanghai are doing really well. The growth is probably I don't know, maybe 10% higher. I'm not sure. Maybe the inward companies not doing so well. But like Mark Faber, he wrote a book called Tomorrow's Gold back in 2004 or 5 or something. One of the key points of the book, what I think is a very interesting lesson, is that in the history of recorded history. Since like maybe year 1000, there's like sort of all kind of booms and busts and so forth, even global bust. But even in the midst of several global busts, there are always 2 or 3 cities that were booming. And I think like today, those cities would be Shenzhen. If there's a bust, Shenzhen. I think India is going to do well, and I'm going to think Iran would do well as well. These are the 3 places that I think would do well if there were to be a really bad sort of global economy.
Okay.
Well, in terms of valuation, I mean, I think one sector-wise, I mean, one sector valuation came really down. That's clean tech in the U.S. So a lot of the clean tech deals are very cheap now, and if you want a good bargain, that's where you look for. Actually, that's very interesting because that's what China needs, right? Is clean technology, and that's what the government supports. So I would say, you know, that's where potential value still lies. If you want to make money and connecting to the needs of China.
Is clean tech a good industry to invest in? I'd like to ask someone who would support this thesis.
Well, I mean, clean tech is a really big word, right? Depending on what. I'd like to hear what.
Well, James, you were at Koshla before, so you probably
Yes,
do
yes,
have
I
a
got-
good answer on that. Tell us.
Thanks for bringing that up. Yeah, we have certainly learned a lot of lessons, investing a lot in biofuels, and I think it's I think right now there are gems now. You know, we have basically invested probably 10 years ahead of the time. Right now, many technologies are possible now, and I think, as I said, looking at the companies we invested in and we lost money on, a lot of them are very cheap, and I want my fellow investors to take a closer look at them now.
In terms of valuation, I found that I have some observation on this topic. I found in each country, it seems like there are very extreme valuations. Some of the valuation seems very reasonable, and there is a group of startups, they have a very high valuation. And especially in China and Singapore and even Israel, sometimes I see some of the startups' valuation is even higher than Silicon Valley. Yeah, but you can always find some startup which is reasonable. And I always tell them that if they start with a too high valuation, there is actually backfire effect on this.
Yeah, absolutely, the backfire effect.
Yeah, so I have started to see valuation in both US and China started to adjust. And then the startup that came to me in June, they actually came back to me again, and then they asked me for 70% off. 70% off.
Wow.
And they still couldn't get money. But right now, at least they
So what happened to them?
Oh, they got money because it's cheap enough.
At 70%
and then,
off.
yeah, and then we had, we brought in 2
Yeah.
best VCs in China now.
Sure.
But anyway, so I think there's definitely valuation adjustments.
Yeah.
But I think, like I said, I think, good entrepreneurs still outstand. It's just that maybe valuation will adjust, but, it allows them to focus on products. And I think it's good for investors as well as for entrepreneurs.
Yeah. Yeah, I've been hearing it's a good time to be a VC now and invest because valuations are down.
Yeah, I think last 18 months is a good time for being an entrepreneur. A lot of VC to become an entrepreneur because it's easier to raise money than give money.
Okay, interesting.
The market is clearly cooling down, but I think the market leaders can still raise money at very nice valuations. I think for our business, it's to bet on the right companies, not to pay cheap for those wrong companies.
So why do you think all these companies are merging now in China? Is that because they can get a higher valuation as a merged company?
No, I think at $1 billion fight, I think it's difficult to keep on fighting. Like, no one wants to burn $1 billion in a year. So I think at millions of dollars, I think people, investors will keep funding you to fight. But at billions of dollars, I think no investor will support you fighting. I think then we have to merge.
Become the dominant player is a survival tactic. Go ahead, Alan.
I think the valuation chat is a good way to judge, you know, the entrepreneurs as well. I mean, I think the more seasoned, I don't know if everyone agrees, but more seasoned and sort of, you know, longer-term entrepreneurs are going to realize that, you know, they are willing to come down on price when it's competitive, and then there's money out there, but you have to be good to get the money. And I think everyone realizes, especially if they're seasoned, is that this price is not what you're supposed to be worried about. I mean, worry about the price in 5 years if you're still around, right? Like right now, sure, you get it at like 15 million and you get like 2 million in the company and you own 20%, so you're feeling good, but you know, that's just a piece of paper and it really doesn't mean anything. So I think, at least for us, you know, we really believe of, you know, feeling out entrepreneurs to see how they feel when they say, oh, I want 10, and then you just go lower and see how they react. And you can really see, you know, sort of maturity overall and see how they react, like, you know, as people and as founders in general.
Are you encouraging your portfolio companies now to cut costs? I mean, this is always something that happens every cycle, that the VCs and the angel investors and say, oh, you better cut costs now to survive the winter. Are you seeing this happening now? And are you encouraging your companies to
I think, you know, we try to tell them to be like reasonable, because I mean, sure, there's going to be a bad market, but you know, if they have good growth and you know, it's supporting, and you know, I mean, they're a fast-growing company. I mean, the last thing I want to do as an early-stage investor is to tell them to slow down, because I mean, that's almost the entire thing that I'm betting on. So I don't know.
Is growth.
Exactly.
Fast growth and profitable growth. Anybody else on that cutting cost? Yeah. Chris, you want to weigh in on that? Okay. Carman?
I think we didn't try to really cut costs, but we try to find better and smarter way to grow the business. Like, because nowadays we have a lot of O2O, even O2 human power. So instead of if you stay in Silicon Valley or places like Hong Kong, the workforce is much more expensive. So you could have some solution, a lot of solution like outsource customer service and even outsource sales team. And I have found a lot of my startup, they even have their engineering team in Eastern Europe, which is much more loyal, and the salary is much lower, and they are really good. So I found that my startup, they start in a very small scale, but they are already having a global team. So so this is my observation.
What are the James?
I just want to add one thing. Yeah. So not so much slowing down. I've been telling, you know, my companies to be realistic with regard to how long it might take to raise the next round, and to start thinking about unconventional ways of raising money, you know, corporate, you know, et cetera, et cetera.
Debt finance.
Yeah, exactly. So yeah, I mean, whether to slow down or not, right? I mean, it's really up to the entrepreneur and up to the management team to decide, but they really need to have a realistic expectation with regard to how soon they can raise money.
Right. So we have a Hong Kong audience here mainly, and a number of you investors up here are investing in many markets, including Hong Kong. So what is your view of the Hong Kong entrepreneur? How does the Hong Kong entrepreneur stack up against those you're seeing in Silicon Valley, in Beijing, in Shanghai, in Taipei?
I don't invest in Hong Kong, but I would assume that like LPs, GP, you know, entrepreneurs, everyone, if you look back over the past 10 years, you probably made more money if you bought real estate. So I think that trend follows through. That's the core of sort of the entrepreneur, other than these great people who are here today, which I'm very happy to see and meet. But generally speaking, if you look back, I think that's dominated by...
Yeah, that's been the history, yeah. But looking forward, what do you see?
So what we found the team in Hong Kong is that it's hard to hire talents, because there's not much talents who wants to join the startup. Yeah, a lot of people just want to take the safer path. So I think that's their challenge. But what I found, you know, outstanding quality of a Hong Kong entrepreneur is that because it's a global city, global country, and then so, you know, so if you compare Hong Hong Kong entrepreneur to player like I see Taipei or like recently India. They are more globalized. They have like big vision, but I think the challenge is really hard to find qualified talents to really make that happen. And then also the capital you have to raise outside Hong Kong, and then that takes a lot of efforts.
I also want to share some observation because I have invested some company both in Hong Kong and Silicon Valley, and I found that actually in terms of hiring talents, Silicon Valley also is having a very hard time because talents are really very expensive, especially like engineer. A fresh grad engineer is earning more than 1 million Hong Kong dollar per year, so it's extremely expensive. And so that's why even you have a lot of talents in Silicon Valley, but a lot of small team, new startup, they tend to look for a solution outside Silicon Valley. And for Hong Kong, recently I've been invited by Korea government to go to one of their conference, and my observation is like when I go there, the whole conference is in Korean language, and there is no interpreter. And the government paid for my ticket and hotel, but they didn't arrange the interpreter. And so I was like, I really tried to stay in the conference, but I can only stay for the first session that it was in English because they invited a speaker from Spain. And then after that, I can't stay there anymore. And then when I go back to Hong Kong, I found we have a very good environment and ecosystem to prepare our entrepreneur to target global instead of just Hong Kong. So just like Rebecca just mentioned, one of my investee, Event Extra, they just did the check-in service for Web Summit. And I just been to Web Summit in Dublin, and I have heard a lot of investors. They mentioned that last year there was long queue everywhere for the check-in, but this year there's no queue at all, and they like the service very much. So I found that the Hong Kong startups still have a lot of potential globally.
Okay, let's wrap up the VC panel. I think it was a pretty dynamic panel, and we're going to do our traditional photo op, so give us just 1 second. While we do that. Thank you very much to James and Alan and Carman and Matt and James.